Greetings everybody. I'm Guillermo Prile, and I decided to dedicate my thesis to a serious issue in the financial sector, which, in my opinion, oftentimes does not raise the attention that should deserve: the shadow banking system. In the light of the Keynesian monetary theory of production, the goal of this thesis is to assess a possible reconciliation with the shadow banking system and the endogeneity theory of money supply, which would embrace a secondary banking system with the aim to reestablish the balance between the demand and the supply of money. So just before the start, I would like to give you an exhaustive review of what I mean with the shadow banking system. With the shadow banking system, it is meant any credit intermediation involving entities and or activities outside the regular banking system. After the housing bubble burst in 2008, it brought out into the open the complex balance between the common banking system, to which everybody is accustomed to, I think, and the parallel secondary banking system outside of the banking regulatory arm. Like traditional banks, in fact, shadow banks carries out credit intermediation, yet unlike the former, which are financed by deposits insured by the central banks, shadow banks have always relied upon non-insured transaction, which may or may not be guaranteed by commercial banks' liquidity channel. So for this reason, the shadow banking system heavily relies on short-term borrowings activities to finance long-term lending operation. This business is not unusual, as traditional banks do the same thing. They invest in short-term borrowings, namely deposit, to finance their long-term lendings, obviously loans. Yet traditional banks are regulated by appointed supervisory authorities, whilst the shadow banking system obviously is not. So the shadow banking system is extremely vulnerable to the occurrence of credit events and other unfortunate situations. Nevertheless, the precariousness of the shadow banking system never clashed with its success and incredible growth in the last 4 decades, which completely disrupted the entire financial intermediation process and maturity transformation. And it does not seem to have stopped even after the 2008 crisis, for which the shadow banking system has taken harsh criticism. In fact, against the trend of traditional banks, which had to go through a process of deleveraging, shadow banks have become more and more involved in financial markets and credit intermediation. The sector indeed has partially eased the credit crunch in the real economy. However, its expansion has determined a broader risk distribution in the financial system. The same shift of credit intermediation towards a less regulated sector as the shadow banking system is, and its growing role in the financial industry, have raised some concern for the global financial stability amongst many economists and analysts. Moreover, the shadow banking system is often used to elude the banking regulation, in that it fragments the traditional credit intermediation process in structure juridically independent from one another, which then trade with each other. A particular example of this phenomenon will be given later when we will discuss about the Irish SPVs 110. Anyway, in a sense, this wave of the regulation and decentralization pushed the financial system forward, allowing to reduce intermediation costs, fostering the development of new credit intermediation channels, and obviously increasing competition in the banking system. Yet, at the same time, this modus operandi has lowered the efficiency of the entire prudential supervisory mechanism, since all financial intermediaries would like to replicate or at least emulate this approach. So in the context of deregulation, Ireland has emerged as a favored location for special purpose vehicles. With SPV, special purpose vehicles, we mean companies which are created to fulfill, let's say, a specific objective for its originator, despite being completely orphaned from the sponsor company, which can then take the SPV's activity off their balance sheet. Usually, the special purpose inheres in collateral-backed credit transfer from the sponsor company to a pool of investors, which are generated by the SPVs through the securitization process. In particular, Irish SPVs have been increasingly used as investment vehicles. What is Irish SPVs 110? It's basically an Irish tax resident company which qualifies under the section 110 of the Irish Tax Consolidation Act, enabling the SPV to attain tax neutrality. The function of this loophole is not that simple, but bear with me and I'll try to explain it in a few words. Basically, to get a zero tax position, the Irish Tax Consolidation Act allows profit participation notes. These are, let's say, artificial internal loans to the SPV, whose rate can be sufficiently variable to absorb all gains generated in the SPV. As an Irish trading company, the SPV can charge loan interest as an expense, so they're deductible against Irish tax regulation, rather than a deemed profit distribution, which would not be deductible against Irish tax regulation. Normally, the profit participation notes are often domiciled in a tax haven, and as Ireland has no thin capitalization rules, the SPVs can be 100% financed by the profit participation note debt, making the SPV a fully tax-free entity. Although through many years and countless scandals, a lot of features have changed. Basically, nowadays, the process is still the same as it was when it was first designed. In my personal opinion, this example how the shadow banking system has been operating in Ireland illustrates the double-edged sword that the shadow banking system itself is. On one side, it cannot be denied that Ireland and the Irish job market have gained tremendously from the internationalization of the economy, multinational knowledge spillover, and labor pooling has increased Irish productivity and technological progress within the years. On the other hand, though, putting aside the loss of potential money for the state budget, which has been huge, not only for Ireland, but for the whole European economy, the first concern that should deserve the biggest attention is how much unregulated the sector itself is. To corroborate the statement, revenues, the Irish government agency dedicated to taxation and related matters, has never conducted any type of investigation on SPV's 110 operations since basically its creation, which dated back to the 90s. Anyway, one can argue that not all the fault is to be put on the shadow banking system's shoulders. In fact, this type of loopholes could have been closed by political and monetary institutions if they really wanted to. Yet they have oftentimes decided to waive the required controls, allowing that through multiple liquidity channels, a substantial injection of liquidity took place. This hypothesis is corroborated by Minsky's theory of endogeneity of money supply, which comprised the need for a monetary institution to abandon the traditional monetarist model, as it is impossible, according to Minsky, to control the quantity of money in circulation as it was in the past through traditional monetary policies. In fact, as Minsky forecasted back in the 60s, the shadow banking system can be seen as the second banking system, which he forecasted, which is necessary to ensure that the money supply is always able to satisfy the growing demand of money into the economy. At the same time, from the perspective of the Keynesian monetary theory of production, the intervention of the central banks or rate of interest, namely monetary policy that was aimed in the past at achieving certain objectives in terms of inflation and income, today is totally irrelevant, as the financing of production does not depend on savings, but on bank financing. And as the traditional banks, given the reduction of their income in real terms after the 2008 crisis, so their borrowings decrease, the role of the shadow banking system was the only way to guarantee the maintenance of demand for consumer goods at a certain specific level. In fact, the contraction in saving was countered by an increase in profit of aggregate of companies, for which the shadow banking system has ensured the tool for achieving this goal. Now, as we come to the conclusion of the thesis, I personally think that as it currently constructed, the shadow banking system can very well be posing a threat to the entire world economy in the near future. Yet the answer is not what one might expect. Stricter prudential policies, if not harmonized in a worldwide perspective, are plain and simple useless. The central banks, as explained above, are incapable of posing serious repercussion to the shadow banking system, since the sector itself legally is more similar to a very successful private business sector rather than a traditional banking system. In my humble opinion, the presence of a complementary banking system to the traditional one is not necessarily an element of concern if it is understood as a way for the economic system as a whole to ensure the liquidity needs. Considering the articulation of the shadow banking system, it is possible to highlight how the economic system has drawn on a multitude of sources of financing in view of realization of certain profit and accumulation project. If such facts represent a confirmation of the endogenous nature of the money supply, which means stated, it also proposed the issue of control of monetary issuance. Now, the problem of financing within the capitalist economy needs to be addressed regardless of the neoclassical perspective, which curbs its relevance to funding of investment. Yet, through a reflection that moves from the distinction between the different types of financing, it is possible to move towards a better, let's say, understanding of responsibility and the role the shadow banking system could play in the light of the recent great lockdown crisis. For this reason, regulators should encourage the proliferation of the shadow banking system as long as few steps are taken. First, additional balance sheet statistics are necessary for the entities whose assets comprise a large percentage of the shadow banks, so as the monetary institution could use them to have a grasp on the liquidity circulating in the economy. Second of all, shadow banks should release activity conducted primarily through financial market, which currently remain under the radar as they escape both monetary statistics and the flow of funds accounts. I don't say it's easy to do that, but it's necessary to go forward. And third of all, the supervisory agency should be able to identify the aspect of the shadow banking system posing the most systemic risk for the economy. First of all, authorities should pay attention to two risk factors in assessing the potential negative impact on the financial system, such as the interconnectedness with the regular banking system and earning performance. So to wrap it up, I wanna thank you for the attention, and I'm welcome to any type of question you have for me. Thank you very much.